To know
that.
Seller concession to make the client happy.
Say that again. What did you say?
That we'll get very creative to make the client happy, and you
Yes.
will, and we'll work with you, and we'll get seller concessions, so you're able to work with their rates as well.
Yes, we actually had a deal last year that was a slam dunk for the client. And we were creative, and we actually, in my whole entire office, everybody was like shocked that I was able to do what I pulled off because it didn't exist. We did a temporary and permanent rate buy down. So I think they're paying currently a rate that's in the, I think it was like 5 or in the threes right now. So their payments like as if they're paying like a 3%, but then I think their locked in rate is like in the sixes or something, where everything else was at the time in the sevens. So it was really good win for them. Thanks to the seller too. The seller helped to make that happen.
Yeah, we got, we ended up getting like $30,000 in seller concessions, and then another 10,000. Together, we ended up with, I think, over $40,000 in seller concessions. So.
Yeah.
And then
that was a great win.
That's great.
And then what?
That's crazy.
And then made them do repairs.
Yeah. Yeah. But great clients. They were super helpful and, very supportive of our efforts and appreciated it very much so. Okay. So, just enough about obviously me. I'm going to get everything started, but I want you guys to also know that, we start off as a marketing company. So everything, we run like a lot of different, social media stuff, but we're also AI driven. We do a lot of tech stuff. So that helps, for people that we partner in with as well. Specifically for reverse for purchase, I'll give you guys at the end after we get done with the presentation. I've created about I think we've made about 12 total social media posts done for you that you can just put your own logo, change your name and your picture on there, and it'll help you with, done for you posts for reverse mortgage for purchase. But my goal is also to help you as realtors and partners, hopefully, that we can do more business and help you grow together, is making you stand out. Because in everything that you see on social media, I'm sure with other realtors that you follow in your area or out of state, they're always marketing something kind of similar to everybody else. Oh, the feds are meeting. Oh, the interest rates are lowering, something very generic, or, oh, I'm really good at selling homes. But what can make you stand apart is knowing specific things that meet a different market, maybe. It looks like we lost Dana. But, just I want to help create other types of conversations for you with maybe new clients or existing ones, past clients that may be looking to make a change within the next 5 to 10 years or sooner. Sometimes people's life, I'm sure, as you know, they'll be retiring. Maybe they want to buy a second home. So standing out and being different is a great way to be different, right? So let me go ahead and we'll just get things started on my slide deck. I'm going to share my screen. Okay. Put this down. Okay. So you guys can all see my screen?
Yes.
Yes.
Okay, good. All right, so we're going to talk about reverse mortgage for purchase. And you can cater to people in the 55 and up community. We'll review kind of a general sense. Everybody knows a basic of what a reverse mortgage is, right?
Mhm.
Yes.
Jenny, are
Okay.
you familiar with it?
A little.
Okay. They don't really teach you a whole lot in real estate school, and the same
Yeah,
thing with
you could go
loans.
over the basics of it. Yes, sir.
Okay. So basically, a reverse mortgage doesn't require the client, the borrower, to make a monthly mortgage payment. There are standards for being able to qualify for a reverse mortgage. It is only offered for seniors 55 and over. 62 and over is only offered by FHA. So the 55 and up community could qualify for proprietary, which is basically a jumbo reverse mortgage that is insured, still a non-recourse loan, but it's only directly with private investors through the reverse mortgage bank themselves. They hold and they service those loans directly. So the only requirements really is that they meet the age requirement. It's their primary residence for 6 months and 1 day out of the year. And they have to make their property taxes payments on time, and the home has to be insured, and they have to make those payments on time. And they can't let anything like fall apart on the home. So if the roof has a leak, they need to have it fixed. They need to have enough funds, you know, regular house maintenance stuff, upgrading the kitchen, anything like that, that's not required. But you just have to be able to really maintain the home properly so that it doesn't cave in or, fall apart. Um, those are the only requirements. And then basically the loan, instead of being a forward loan where you make a monthly payment, the bank just takes interest out every single month and it just will accumulate over time. But we'll talk about some more things, and maybe you guys will have questions as we go along about specific scenarios. So it'll kind of make more sense if you're if you think that way about like a scenario or, can relate it to something, it might make better sense. Okay, so this is Greg and I. We own Choice Home Mortgage. I already kind of went over everything with you guys in relation to who we are. We do pride ourselves on customer service, and we have quick turnaround times. We have very low rates. And we also, as Michelle knows firsthand, we find workarounds and creative strategies. So if someone gets said no, I will literally turn every stone over and try to find a way to make it work. Right. Okay, so basically, we're just going to go over some general things about reverse mortgages. We'll talk about some known myths, statistics, how to qualify. We'll run over scenarios and how does it benefit a borrower to think about this for a retirement plan, and different challenges that may come across, but obviously also to help you as realtors to get more transactions or to be more of a trusted resource for them, because sometimes they don't know about products like this, right? And it could totally help you tap into an untapped market because as you will see on the statistics screen, there is a huge need for these types of loans, especially with the rising costs of living today and on fixed incomes for people. Okay, so first off, one of the most common misconceptions I hear, and I'm sure you guys have heard this many times, is the bank owns the home. And there's horror stories about this that happened way back in the day. I think 1965 or 8, I think, was one of the first reverse mortgage loan was ever made. And they have gotten so many more protections and laws in place. And since really 2008, things have changed progressively. Actually, since '06, but it has progressively gotten actually to be the most protected loan, in my opinion, because they have put in so much protections for seniors. They retain title. to the home. The bank does not own the home. It works just like a regular forward mortgage. They stay on title. They can even have the home held in a trust. The trust just has to be reviewed at the, before closing by the lawyers, and they can have all of that. So if they didn't want to, out here in California, a lot of people do that. I don't know if they do in Texas. They typically try not to hold title as individual. They'll put it in a trust to prevent probate
Right.
upon the death. So the other one is if the clients pass away. Now the bank owns the home. That's actually not the case. The heirs have the ability, obviously, they'll need to contact the servicer of the loan and let them know that the borrower passed away. And they'll just need to figure out normally the bank gives them about 6 months to 12 months to get the home sold or refinance it, whatever the heirs decide to do. And you just have to let them know. No payment is required during that course of time. And as you know, if you were to inherit a home and there was a mortgage on it, you have to make the next month's payment. So this doesn't require that. They allow the family to take care of the affairs, just in a timely manner, is basically. But they give you time to also grieve. So any other questions like regarding myths or misconceptions that you guys have about reverse mortgage? No?
I
Okay.
have a question.
Sure.
So during that 6 months to 6 to 12 months after someone passes, does it accrue interest?
Yes.
Are they going to pay interest on the house?
It will accrue interest until the loan is paid, right? So you've got, let's see, but that is a good question. I will double check, but I'm pretty sure every single month it's not paid until it's due. Like, okay, so when someone dies or if someone were to move out of the home, okay, that flags that it's a life event. So when you have a life event, the loan would then become due and payable. So with a death, obviously they're going to give you time, but it would accrue interest until it's paid. Just like any other mortgage, when you get a payoff and you close at the closing table, it operates the same based upon the date of sale.
Right.
Yeah.
Okay.
But it's not coming out of anybody's pocket. It's just coming
They're
out
just
of the
not
loan
gonna
balance.
foreclose on you.
Right.
Okay.
Okay, so statistics. Every day in America, there's at least 10,000 people turning 65. This obviously is a growing number. It hasn't always been the case, and we're seeing more and more older people live longer. And the amount of equity in the United States that the seniors hold is 12 trillion nationwide, which is a huge potential here. But what's even wilder is that in all of the loans in America, the reverse mortgage loan space only accounts for 2 to 3% of all loans that people hold. So just to give you some reference, in Europe, it's 40%. So there is a huge amount of people obviously aging. They either want to age in place, or maybe they want to downsize, or maybe they want to get a bigger home, be closer to their grandkids in a different state. But what they a lot of the times think that they have to do for having a retirement plan is they need to take the equity in this home and then go buy their downsized home or their right size home, however they see it, right? Because it's not necessarily a downsize. But they take that equity and then they'll just buy it in cash, which may not be the best scenario depending upon what other retirement plan that they have. This actually fits very well for a lot of financial professionals as well. I talk with people that are financial planners that help people with their stocks, their bonds, their 401ks to elongate, all of that has a timestamp on it. It's only good for as long as they make the plan, right? And it's based upon a algorithm of life expectancy. Well, the reverse mortgage works the same, but the reverse mortgage itself never goes away. It's just based upon a projected number. So they will literally allow, if two borrowers, husband and wife, if one were to pass before the other, doesn't matter. They still can live in the home for the remainder of the other spouse's life and have the benefits of the reverse mortgage. So it works well for a lot of people, especially when you have circumstances where, unfortunately, a spouse may die, and when the spouse dies, their income goes away as well. And so that can put a big burden on, like you have, say, a husband passed away before the wife, and the husband had a big pension that was not a benefit to the spouse upon death, and then the spouse's income was only maybe Social Security income. Well, her ability for life monthly, like going out to eat, or her monthly income has shrunk quite a bit, and it can be very stressful on someone, in that circumstance or situation. And a lot of the times they have to move. They have to sell the home that they were in because they can't afford the property taxes or maybe their mortgage. So I just want you guys to know these statistics, because you could tap into your current clients or future clients, for them to think about. It's nothing that you have to push, but it's just an option for them to consider. It can work for a lot of people and make their retirement more stress-free, I would say, not having to have that payment. So let's talk about the statistics and trends with ages of home buyers. So I thought this was really cool. If you look at this chart, basically from Gen Xers all the way to, your older boomers, that's like a huge portion of the market. You've got 24% of people that are buying homes from ages 43 to 57. And then the younger boomers, 58 to 67, 23%. I find this bracket right here between young boomers and older boomers, these people, a lot of them, they're either wanting to age in place, or they are wanting to buy a retirement home somewhere else in another state. And I have, I'll give you guys an example of a lady. She had a home in Washington State, and she had renters in there, and she was ready for retirement, and she had started a mobile notary business, but she wanted to live in like a 55 and up community, so she had more of a social life. So she moved. We found this. She knew she wanted to be in Northern California because that's where her sister was. And there was this really cute community about 40 minutes away from her sister's house. That's a newer development called Trilogy. And it's beautiful. It's, kind of like a smaller town right now because they're building it up, but there's a lot of newer construction homes. And as you know, in California, real estate is very expensive. But they've priced these homes right around the 400 mark. So it's really like, so she took her like, I think she sold for like 950, something like that, of her Washington home. She, after payoff, she maybe had like, I think right around 5 or 600,000. But she was going to consider just buying the house in cash. And I said, well, what other, retirement plans do you have? Because the only income she had was Social Security income. And she didn't have anything. The home was her retirement plan. The equity in the home was her retirement plan. So we ended up putting her into the right sized home, 2-bedroom, 2-bath, on the golf course, in a nice community. She's got friends in the neighborhood now. but she doesn't have a monthly mortgage payment and she has the funds diversified. She actually has a line of credit on the reverse mortgage that she has a benefit to be able to tap into and draw from for the rest of her life. Never goes away. So at any point, if the roof were to go kaput, she can just draw it on that. And it's non-taxable, by the way, which is a huge benefit. There's no tax when you pull, no personal income tax when you pull money out of your home with the reverse mortgage and line of credit. So anyway, she basically now has some funds put in her, portfolio. And then she has some other funds where she has in her line of credit that also has the growth rate on it. So it acts like a CD as you would at about 8%. So it makes 8% for you on your money just sitting there. Just nice. She's in a very
That's nice.
good situation now, whereas this is another scenario that we can kind of go off of, similar to my client's situation, and I'll show you guys. So just real quick, I want you guys to also know the average Social Security income in America right now is $1778, which is really sad because most mortgage payments are probably on general somewhere around that. So, with the rising cost of inflation, we know, obviously, I'm sure all of you guys have been affected by gas prices, grocery prices, the same thing for seniors, but they're on a fixed income, a lot of them, right? And when you retire, the last thing you want to do is having to worry about your normal way of life. You can be frugal in certain things, but other things can be very difficult and stressful, and can cause health problems because of that. So anyway, let's go over the Wilson family. So we've got two married couple, husband and wife, 65 and 67. These loans are based upon age. So they want to purchase a new home, be closer to family with cash to avoid having a mortgage payment because they're on a fixed income. The challenge. So the couple plans to sell their current home, clearing $500,000. They own it free and clear, so they have $500,000 to work with. And they're going to buy a new home with a total of $500,000. However, they also want to improve their retirement liquidity because, unfortunately, a lot of people don't have other retirement assets that they have. Some people do, some people don't. But there are a lot of people that do not have extra savings, additional stocks, bonds, So let's look at this scenario. So on the left-hand column, we have the traditional. They're going to take the proceeds of the $500,000. They're going to buy the new home, $500 in cash, and their monthly payment would be $0, but their proceeds would be $0. They would have no remaining proceeds from the sale to diversify, to use for retirement. Think about that, right? Yes, no mortgage payment, but there's no additional cash or liquid available to help them grow, or to have on the side for retirement in case anything were to happen. So what the HECM for purchase allows for this scenario, they take the $500,000, they're going to purchase a new home for $500,000. The required down payment in this scenario based upon their age would be $319,000. So the reverse mortgage the lender then pays the additional $201,500 as the loan amount. There's no monthly payment required, and that loan becomes a full reverse loan. So they put in their down payment cash proceeds, the reverse lender comes in, does their loan. And by the way, just a side note, the income qualifications are way, way, way less strict than forward mortgages. It's a residual income, kind of like a veteran income calculation, but way less stringent. I think the average household income has to be like $938 for husband and wife. So they just have to be bringing in roughly around that. And then their debts are taken into consideration as well, but it's not hit like what you're used to on debt to income ratio with 50%. It's not like that. It's a lot less strict. So anyway, back to HECM. So this allows them no monthly mortgage payment. But what's really great too is they get to keep the 188.96. So that 180,000, they can then put in, they can put a portion of, they can overfund the reverse and put some in a line of credit, kind of like whenever they need to use it for a rainy day, or if medical expenses were to come up, they can draw from it. Any point, there's not, you just call the servicer, you just request to have a draw out of it, and then that adds to your loan balance. But just sitting there, it doesn't accrue interest. It doesn't act as anything. It's just there in case you need it. They can also go in, you know, a lot of seniors want to do like a part-time gig. Maybe they want to be a handyman, or like my client, she started a mobile notary business, you know, so she had some funds available to do that. Any questions about this scenario?
No.
No.
Okay.
It makes sense.
Hmm?
It makes sense.
All right. So what I was just talking about, a line of credit scenario. So funding the line of credit with the proceeds of the home. So like on the instance of they have 180,000. So you see how we've got, so let's say we've got proceeds from the current home is 450,000, and they're purchasing a new home of 600,000. So the loan would be, 241,800 that the reverse mortgage lender is going to start the reverse mortgage loan on. And then they're going to come in with the 381 as their down payment. So then after closing costs, maybe 23,000 in settlement fees, the sale proceeds. So they're gonna have available cash on this scenario of 41,000 for them that they could add to the line of credit. It's just another way of basically saying you can choose to overfund the loan with the proceeds that you took from the sale of the home. You can overfund the line of credit and have it grow for you like an emergency fund, without having to accrue any interest. I kind of already went over that. All right. Okay, so I wanted to talk with you guys, obviously, because this is most important for you. Sales. So I know that, you know, right now, I don't know how your listing market is, but there is a, you know, you've got clients that may be looking to sell, and maybe they're moving, kind of like our clients were, where we have the family members that they'll probably all trickle down there eventually to Texas. You know, but it allows you to sell more during a challenging market. Obviously you would get same 2 transactions if you're helping on the sell, and then on the buy side, right? Still works the same. You know, you can help the clients, you know, have other options to think about, even in like a listing appointment. If you've got older clients that, they're retiring, or maybe they are retired and they're moving to Florida, it might be something for them to think about on the other side of the transaction, you know, as something that you can just have in there as, hey, if you've ever thought about, have you ever thought about this? And, you know, it might be eye-opening for them. I've written a book, by the way, and I have an entire YouTube series on reverse mortgage. I'm in the process of writing one specifically for purchase. But my entire series and everything is just explaining reverse mortgages, because there's so many unknown things out there. And I think a lot of it's just because people just have unanswered questions that they just didn't know because they didn't exist before. All these protections and new things that have come out since 2017 are new. And they're not like what they were before. I mean, I remember when I went to real estate school in Texas and they talked a lot of bad things about reverse, saying that they were the worst loan that there was. They were taking homes from seniors, you know, and I was scared of them.
I mean, they used to be back in the day, right? Just like people are so scared of VA loans, and
Yeah,
for
which
no
is
reason.
it makes no sense to me because I mean, anybody that serves our country, you know, they deserve the best.
That's right.
Um,
They earned that
and
benefit.
they earned it. And 100% VA loan, why are you scared? It's guaranteed by the VA, you know, as long as they're fully underwritten, it's a good loan. The only issue would be if the property didn't pass the inspection, which I don't, as a seller, you shouldn't be selling a home if it's not going to pass, you know? And if you have a little hiccup, like with termites, like here in California, you just get it cleared. And normally it's like a few $100s to get it cleared, depending upon the damage. And then it's done. It's not a big deal.
Yeah, ours is more on the foundation side, which is a
Mm.
bit more than a few $100s. But
Yeah.
we would ask for it if it was a conventional loan, FHA or VA cash, we would ask for it to be done anyway, so.
Hmm. Do you guys have termite issues out there?
Very rarely.
Yeah, I don't ever really recall any issue coming up in any transaction for me when I was down in
Yeah,
Texas,
ours
but
is more like rotted wood, peeling paint, foundation, and the soil line is too high
mm,
on the house. That's about it.
yeah, yeah. Well, the other thing I kind of did touch on this too, you know, generating business with your past clients, which you should already be kind of talking to them, you know, nurturing them because a past client is a great referral source, right? And having that relationship with them and, you know, life changes. So, you know, taking a look back at some of your past clients, touching base with them, saying, "Hey, you know, are you guys retiring soon?" You know, finding all that information out can help you to also gauge where they're at and maybe, you know, having this conversation because reverse mortgage for purchase, and I can send you guys the link to my video series, and I have like I think 36 episodes, each are like a minute long. It'll just chunk everything down that you really need to know about reverse in general. I talk about appraisals. I talk about, you know, I basically go through an ABCD checklist of things, you know, and it'll probably make reverse mortgage more of a knowledge base for you after that because it's just knowing essentials and then you can be like a trusted person for somebody if they had a question about things. But this will definitely set you apart, you know, because you're their first go-to person too. If they've transacted with you, they love you, they trust you. And this would be a great way for you to have more conversations with them, to touch them and nurture them for their life changes or things that may be coming up with their family. So, all right. Okay, so both of the jumbo and the FHA reverse mortgages have specific qualifiers, basically. And I've touched on a lot of these, but just to reiterate, so of course, yes, there is a down payment percentage required, but it is based upon their age, the value of the home, and what the expected interest rate is at the time. So those are the factors that they configure to determine how much they can buy in terms of price point and then how much their down payment would be. It's different for somebody that's 80 years old versus somebody that's 62 years old because the 80-year-old's life expectancy factor is less, right? And so the bank is hedging against the fact that, well, they're not going to live 30 years, right? So, but a 62-year-old may live another 30 years. It's possible. So those things are very important for all reverse lenders. And by the way, there's not a whole lot of them like there are in the forward mortgage world. There's really only a handful of reverse mortgage lenders in the nation. Mainly about 10 to be, I mean, I think there's a lot, there might be a list of 20, but there's really only about 10 direct banks that do reverse mortgages. And I work with all of them. Okay, so a borrower has to meet the ongoing loan obligations like we spoke about. They have to pay the property taxes, the home insurance. If the property has an HOA, they got to also maintain the home like we talked about, has to be their primary residence. They can have a second home, but they just have to live in the primary residence for 6 months and 1 day out of the year. And the way that they do this is they sign an occupancy cert every year. The bank sends them an occupancy cert via mail, and they just sign it and send it back, saying, yes, this is still my primary home that I live in and reside. They can have down payment. It's got to be from an allowable source, obviously. The borrower has to participate in loan counseling. That's the other thing that makes this another protection of the loan. It is a neutral third party. They have to go through counseling with a counselor to explain the reverse mortgage. They go over what the amortization would likely look like. They answer any questions for them, and they're there for them to call back if anything. You know, essentially they're there for the protection of the borrowers. They can ask me the same questions, and then they can ask them the same questions just to verify what I'm telling them is true. And I always tell them, hey, if I've told you anything, it's probably right. But if you want to just double check, ask the counselor too, just to verify, because they're there for you. So, but yeah, the counseling appointment, they have to just do it. And it's normally just like a 30-minute phone call. They can also go in person if they choose. All right, so and just for reference, 55 and up is for platinum product, which is your jumbo proprietary is what they call it in the market. Just think of it like a jumbo loan.
Okay.
Okay, so this, because reverse mortgage for purchase, it actually does allow the client more buying power on the loan side. So all of those things that we talked about are taken into consideration to determine how much they can buy. But it gives them more buying power than they would on a forward mortgage where they would be restricted because of their income, right? Because there's no DTI. So it allows them to purchase maybe a little bit of a bigger home than they would qualify for on a forward side because maybe they're on fixed income of Social Security and maybe a pension. And by the way, on average, a lot of the people that I talk with, unfortunately, they can't manage their monthly mortgage payment anymore with the cost of living, and gas prices have gone up and maybe they're now disabled. So they have to sell their home and they have to downsize, and they'll downsize into something that's more manageable for them. But, you know, because unfortunately, that's just the way life works out sometimes for people. And this is just something, you know, that I think, in my opinion, is going to continue to be a major problem within the next 5 years. We're going to see more and more of this. Just the cost of debt in general for people since COVID has just risen like you wouldn't believe. In my world on the loan side, I have seen a lot of loan officers exit the market and go into, because they can't do loans. There's not enough loans to be made, and not very many people. I mean, a lot of people just got into the market because of the refi boom, but a lot of them have transitioned into debt settlement companies. So they're just think about that. And then I'm sure you guys watch the news, all the debt that is accumulated. We're at like an astronomical all-time high for US debt. That's going to have a unfortunate effect for, I think, a lot of families in America. Within the next 5 years, you'll start to see people are going to have to move out of their homes. They're going to have to downsize. they're entering into debt consolidation programs right now, which ruins their credit. And they basically renegotiate all their debts for them, and it takes about 3 to 5 years to do so. And in the meantime, they can't get any lending. So it's going to be interesting to see what happens within the next 5 years. So let's see. Well, I mean, I think this next point is very kind of obvious. Obviously, they can maintain a better standard of living if they don't have the payment anymore of the monthly payment, and then they are on a fixed income. It allows them to, you know, just have a regular, good, less stress, you know, in their retirement. And it allows borrowers to retain some of the proceeds from the sale of their existing homes, maintain quality of life, and eliminate having the mortgage payment. All right, so real quick, sometimes this is not, I mean, I've done hundreds of loans at this point in my career. Never once have I had FHA require a second appraisal on a reverse mortgage. However, because it is run by FHA, sometimes they do. I've had one on a purchase that we had to do once. That gives you any general sense. Doesn't really happen. Seller concessions are allowed.
We're not
and I know
seeing it
that
here.
Oh, you're not seeing it?
No, I mean, like, we're not seeing FHA loans require a
Oh.
second. appraisal.
Got it. Yeah, it's not something that really ever comes up. It's rare that it ever happens. Now, I will let you guys know with the NAR changes, seller concessions. I don't know how you guys are handling it through brokerage, but seller concessions are allowed on both, and you can do up to 6%. FHA has not, kind of like VA has not clearly come out with how it can be written for the buyer's agent commission, right? But everything that I've read is you just basically write it in as seller concession contributed of whatever the percentage is, and then you agree, I guess, within your offer what is going to be catered towards like a buyer's agent commission, right?
Yeah, ours is still separated out. We have different Texas forms for buyer agent commission before you even get it under contract.
Okay. Have you guys always been separated out like that?
Yeah. Yeah, we have, we didn't have a separate, we had a different space on the contract, but now we have a different form altogether.
Okay.
It's always
Like
been
a completely separate addendum.
Mhm. Yeah.
Yeah, we have that in ours now too. So I think there's like some check mark, and then you add an addendum to it, and then you also submit the buyer representation agreement along with the offer.
Oh, so we do not submit that. That is not going to.
Wow.
Yeah, we do not submit the buyer. That's between the buyer and the buyer's agent. They're not even allowed to ask for it.
Interesting. Yeah, they're saying here that that you have to, if you're submitting the offer, you have to provide the buyer's representation agreement showing that you, as the buyer's agent, have an executed contract with the buyer showing that you fully represent them on the property.
Yeah.
Interesting how different states have different
animal.
things, right? I know. All right. So, oh, by the way, you guys, you can do new construction. So new construction is allowed. And so I'm going to just basically interpret this to you. So the platinum appraisal for new construction, when new construction is less than 90%, at least 50% has to be done at the time of the appraisal. So the report just has to document X, Y, and Z, the floor plan, the plot plan, and determine the types of finishes, whatever. But when the new construction is at 90% or more complete, the report just has to list the components that are going to be installed. But then they'll basically take it 90% complete. All right.
Good to know.
Okay. So I just kind of want to leave this up now to you guys. If you have any questions, anything that comes to mind that you would like me to help answer.
Not at the moment. I'm sure I'll come back to you if we get one.
Text me. Yeah,
Yeah.
text me and I'm going to send you guys an email with the link to the pre-made templates for you for social media. I just put those out yesterday to the other people that were on my other webinar. So I've got those readily available. Anytime you guys have anything pop up or have any questions, I'd be more than happy to answer those. I'll give you my cell. And also I will be sending you guys a link in my email later today that has directly to the YouTube video series. And also I'll give you a link that has access to my blog for reverse mortgage. It also has the ebook. It's like a flip book if you want to read through it, and the video series. And be more, I'm very transparent. I do not care. You can share it with anybody that may be interested in looking at it. So, it's shareable. It's public. So let me see. Okay. So obviously I
Can
want
I
to help
get a
you with your
copy of the
marketing.
slides?
Yeah,
Oh,
I can
you're
send
on
them to
mute.
you.
Can I
No,
get a
we hear
copy of
you.
the slides? Oh, good. Perfect.
Yes.
Thank you.
Yes. So I want to help you guys with marketing, obviously leading you to more real estate conversations, but specifically stand out from the rest. This is that type of conversation that'll help you stand out from every other realtor also. Because you're taking it more from a financial perspective of not only being there as their trusted advisor, but also saying like, hey, what's your thoughts for your retirement? It opens up another door for them to also be like, well, hey, have you ever looked into this? I mean, this might be something to consider. I mean, it's not for everybody, but it's not necessarily for people that are on a fixed income either. It works for wealthy individuals as well, because you can diversify. When the stocks are not doing so well here and you don't want to pull money from there because it's going to hit you on a big tax bracket, you can pull from your house instead. We did a reverse mortgage, I think back in 2022. We called it the whale. And her house, I think it was worth like 12 million. And her husband had passed away and all she had was a house. So we did a reverse mortgage. We had to do a jumbo because FHA has their loan limits, right? So they're not going to give any more value past that. So she didn't have any access to any of the equity. So jumbo makes 100% sense. And we put it all in a line of credit that she has access to for 10 years. And I think at the time she was like in her 70s. So she basically just, flipped it into a reverse and took out money and we made a monthly income stream, which is really cool about the reverse mortgage. You can set it up where you get a supplemental monthly income. So to offset other expenses, which is really nice for some people that don't have that additional income. It helps them to elongate, making sure that they have for sure like $800 a month extra income coming in from their line of credit for the rest of their life. So it's really cool. So these are all of my social media. If you're not following me, send me a follow and I'll follow you back. I do put out a lot of content on, just different programs, but always trying to also stand out from the rest as well myself, because I want to be different and I want to help more people. So I think
Love it.
it's important to be unique,
I don't think I follow you on TikTok. I will.
I'm on TikTok, Facebook, YouTube, Instagram, and she's quiet right now, but Kaylee, she's my bonus daughter. She works for us. You want to say hi, Kaylee? Are you able to say hi? You can't. Oh, you can say hi over here. Hold on, let me take my ear things out. She sits behind me. Here, let's see here. You guys can hear me right now?
Yes.
Yeah.
Let's see. Let me put my earbuds away. I don't think anybody can hear me.
Is your Bluetooth still on?
I think I lost it. I don't know. Maybe I have to put them back on. Maybe I have to put them back on. I think I lost the audio. Can you guys hear me?
We can hear you
Yes.
just fine.
Yeah. Here, Kaylee, here, just take this, take my earbuds and say hi.
Hold on real quick.
She's,
Hi.
you have a blurred background. We can't see her.
Yeah, they can't see me because of the background, but yeah. Hi, everyone.
Hi.
Hello.
Hi.
Oh, yeah, I do all the social media templates and everything.
Oh, that's
So-
awesome. Can you come by Esther so we could see you?
Yeah, here. Hi.
Oh, there you are.
Hi.
Nice to meet you.
Nice to meet you. Okay.
You guys can hear me now?
Yeah.
Okay. Yeah, she's my helper, and she just graduated high school. So now she's in on the business. She's going to become a loan officer and a real estate agent. She's getting her licenses
That's
this year.
awesome. I love to hear
Yeah.
that.
So
That's
she
good.
gets to learn all of this stuff, and she's actually the one that helped to create this pretty slide deck that you're looking at.
Love it.
Looks great.
So any suggestions you guys have in terms of like templates or anything like that, don't hesitate, just send me a text and I'd be more than happy to get her to hop on making something creative. We do everything in Canva.
Yeah, we work in Canva too.
It's great, isn't it?
Can you go back one slide? I was just gonna, I don't know if I have your YouTube. And my Zoom was blocking it. Okay, there you go.
Here.
Now I'm subscribed. I love your
Sweet.
videos.
Thank you.
Okay, well, I
appreciate
have
the
to jump
feedback.
off, but thank you so much for
Yeah.
taking the time to go over this with us.
Sounds good.
We'll definitely look into your videos and it'll just be like another thing in the toolkit to help our clients.
Absolutely. Yeah. And if you guys ever have any scenarios or need anything, just don't hesitate to reach out. Follow me and I'll touch base with you guys.
Perfect.
Okay, nice meeting
My
you.
last thing for you while I have you on the phone is, can you send me a link where our clients can apply?
Application link.
Oh, yeah.
That would be great.
I have on my signature, I have a regular general, it's like a general application link that they can apply online directly to like basically my lender software. But I have another one that we're actually working on directly through my website for automation purposes. So let me get with my tech guy real quick and see if we've got that built out. And then I think that would be a better, like,
Yeah,
you know what I mean? Because a lot of people may not necessarily be for, at least for reverse mortgages. I'll give you two different ones. If somebody is likely for reverse, I would suggest the link from my website basically instead of
yeah,
the
perfect.
lender one. Yeah. I'll get with you on that for sure.
Sounds good. Have a good day.
You too.
Bye.
Bye, Jenny.
Thank you.
Bye, Dana.
Bye.